Hello, good day, guys. My name is Nick, technical analyst with SuperForex. Today, we shall be looking at a technical analysis on the currency pair USD CAD. And first, we'll be talking about fundamental analysis before we move right down to technical analysis, which is purely what we're going to be seeing on the chart. Now, we have seen that USD CAD grinds near an intraday high, while parring weekly losses, while oil price retreats from a weekly top after rising the most in a fortnight, as to risk windows amidst a US debt ceiling concerns, but the US dollar has remained firmer, while second-tier US-Canada data risk catalyst eyed for clear directions. Now, US CAD seesaws around the intraday top of near 1.3470 to 75, heading into Thursday's European session, and in doing so, the loonie pair buyers chair recently easy oil price and the US dollar sturdy moves at a multi-day high amidst a sluggish performance of the market. With that said, the WTI crude oil prints mild losses near the $72.60 as it consolidates the biggest daily gains in 2 weeks and slightly upbeat market conditions. As you can see, adding strength to the bearish bias surrounding the black gold in the US dollars, strength and expectations of a slower energy demand, mainly due to softer China data and recession woes in the West. With the hope of this, the US dollar index DXY buyers keep the range at the highest level in 7 weeks, with a mildly big near 102.90 by the press time. And it's worth noting that the recent increase in the bullish bets surrounding the Fed 0.25% rate hike in June, around 20% at the latest versus previous expectations, favoring no such actions in 2023, favor the US dollar boost. Also supporting the greenback bias are comments from US President Joe Biden and House Speaker Kevin McCarthy managed to convince the markets that they can unite to avoid catastrophic default, which in turn underpinned the market's risk on mode and propelled the US dollar. Amid displays, S&P 500 futures print mild losses despite the upbeat Wall Street close, whereas the US Treasury bond yields remain sidelined at a multi-day top. With that said, the US 10-year and 2-year Treasury bond yields rose to the highest level since the 1st of May and the 24th of April, while portraying a 4-day uptrend near the 3.5% and 4.16% respectively, easing to 3.56% and 4.14% by the press time. And looking forward, the weekly US jobless claims and Philadelphia Fed manufacturing survey will join the Canadian Employment Insurance Beneficiaries Change and New Hosting Price Index to entertain intraday traders of the USD CAD pair. Above all, risk catalysts are key for clear directions, while USD CAD rebound remains elusive unless crossing a 3-week-old descending resistance line around 1.3540 by the press time, and that said, multiple bounces off the 200-day exponential moving average around 1.3400 by the press time, and we of course could join a bullish MACD signal to keep the loonie bar here hopeful. Now, what to expect to this? We can see our total daily price on a technical level at 1.347 and a total daily change of 0.0015 yet, and percentage value of 0.11%, and the total today's daily open was at 1.3455. And we have our daily SMA 20, 50, 100, and 200 to be 1.3512, 1.3554, 1.3511, and 1.347 respectively. Now, hoping for a short time sell, hoping to look out for the most recent support zone. We are expecting a quick sell down to 1.32839, which is about 9 pips from that entry point. And if possible, a breakout from this, we're looking at a new zone at 1.29076, which is about 568 pips from that entry point, of course, which is good money. And that's our technical analysis on today's currency pair USD CAD. Now let's move over to the stock markets. Hello, welcome back, guys. And on today's stock market, we'll be having a look at FedEx. And of recent, we have been seeing headlining that new positions being held in the FedEx Federation. And these new positions have been having series of new rules coming up, and this has been taking a shape on the FedEx market. Now we're expecting on a technical level that an overview of at least your entries to the upside. We are looking at a strong buy, and this has been showing on the daily and the hourly and the weekly and the monthly time frame space. And we have our MA5 moving average 5 to be at 2222.4, signaling a buy for the simple moving average. And for the exponential moving average, we have it as showing at 224.46, and moving averages of exponential moving average of 10 showing at 223.10, and exponential moving average of 10 also, we are showing it at 223.63. And for 20, 50, and 100 respectively, it's 222.67 and 224.62. While exponential moving average of 20, we have seen it at 223.31 and 224.35. So we have a potential of a breakout from the 236.49 zone while heading up to a new zone at 250-251.47, which is at about 263 pips from that entry point, of course, which is good money. Now, having a confirmation of this from the daily time frame, we are seeing momentum gradually building up, and we are thinking that at the beginning of the stock market, we are looking at a shift to at least the 230 zones, which of course 53 pips from the entry point, which is good money. Now that's our technical analysis on today's stock market FedEx. I remain your host, Nick. Bye for now.